Exercise 2. The adjusted trial balance for Sentara Marketing follows. Complete the 4 rightmost columns of the table by first entering information for the 4 closing entries, and second by completing the post-closing trial balance. This problem is asking you to differentiate between the temporary accounts, revenues, expenses, and withdrawals, all of which will be closed, and the permanent accounts, assets, liabilities, and the ending capital account. Each account is either a balance sheet account, in which case it will be included on the post-closing trial balance, or an account that will be closed, and will therefore be excluded from the post-closing trial balance. The first account, cash, is a balance sheet account. It will not be closed, so we will include it in the post-closing trial balance. Similarly, accounts receivable, equipment, accumulated depreciation on the equipment, and the franchise account are all assets. They will not be closed, so they will be included on the post-closing trial balance. Accounts payable, salaries payable, and unearned fees are all liability accounts. Liabilities are not closed, they will be included on the balance sheet, and therefore on the post-closing trial balance. Sentara's capital balance, $72,349, represents the beginning capital balance. The capital account is not closed, but the $72,349 must be updated through the closing process. The remaining accounts will all be closed. The first closing entry closes revenues to income summary. The journal entry is a debit to marketing fees earned for $63,600 and a credit to income summary. The second closing entry closes the expense accounts to income summary. Each expense account has a debit balance, so to close each account, we credit the expense accounts and debit income summary for the total of the expenses, $52,149. Income summary is a temporary equity account. Its balance represents net income or net loss. Since in this case the revenues exceeded the expenses, we had net income equal to $11,451. Income summary is closed to the owner's capital account. The closing entry is a debit to income summary, $11,451, and a credit to Sentara's capital account. The final closing entry closes the withdrawal account to capital. This journal entry is a credit to the withdrawal account, $14,400, and a debit to Sentara capital. The next step is to total the columns for the closing entries, $141,600 in debits and $141,600 in credits. Let's go back and look at Sentara's capital balance. The post-closing balance in the capital account is equal to the beginning balance, $72,349, plus net income, $11,451, minus the withdrawals, $14,400. The post-closing trial balance amount is $69,400. The final step is to total the post-closing trial balance columns, $105,700 in debits and $105,700 in credits.